Hi, this is Demo Gonzalez of Heartwood Financial Services. Hey, thank you for joining us for our latest video. This one is a financial education video titled Feast or Famine. So I'm going to be talking about market returns. You ever hear about how the market averages around 10%, but yet you rarely see 10% happen? Well, I'm going to get into that, show you some charts, show you some of the takeaways that we can get from looking at these historical patterns. So thanks for joining. I hope you guys enjoy. Go ahead and click subscribe. Feel free to share the video with your friends. Appreciate it. Okay, so here is the main chart I wanted to show you. It shows the stock market, essentially the S&P 500, since 1926 to the present. In this case, 2019 is the latest data they have for this chart. So that's 96 years of history. So what you could see here right away is that there are a lot of green years, although there are also some bad years here, which are in the orange color. But I want you to see how many are more than 20% plus returns versus negative 20%. So that's a good thing. The other thing that jumped out at me too is how often this historical rate of return, which is right around 10%, actually is realized. You can see here the 8 to 12% range actually doesn't happen very often. So what's interesting is you either get these really great years or you get these really bad years. And that's why, this is all titled Feast or Famine. I don't know if too many people realize that this is actually how the market dynamics work. I'll also point out that the negative years versus the positive years, about 3/4 of the time is positive versus about 1/4 being negative. So again, that's what helps the stock market go up over time. Okay, I'm a sucker for charts. I got to show you just one more. This one is the remain invested chart. You probably heard this before. When you miss the best few days in the market, the difference in your returns can be pretty big. So here in this chart, you can see that when you miss none of the best days in the S&P 500, and this is over to 1999 to 2022, you're looking at 4,786,000 plus when you start with a $1 million hypothetical portfolio. If you miss the top 10 days, you end up with less than half of that. If you miss the top 25 days, you end up with almost no return in this very long period of time. This is what, 23 years? Not great. And so, the question you might say is, well, when are those best days? Nobody really knows when those best days are. But here's what's, I think, the most powerful part about this chart, that it showed right here that in those 20 plus year periods, 21 of the 25 worst trading days were followed within a month by one of the best 25 trading days. In other words, when things were down, usually that was, and they were really down the worst, that was a really good sign that things on the next month could be turning around. And those are some of the best months. So basically, stay invested, right? Because when you get out, especially when things are really bad, and you don't participate in things coming back, this is oftentimes when you miss those best trading days, and you could actually realize returns like you're seeing here. All right, so the bottom line here is expect volatility, right? You saw in that feast or famine chart, there's usually a lot of high returns or bad returns, not a lot of stuff in the middle. And that's actually pretty rare that we see average returns in the market. So expect volatility. The second chart reminded us about staying invested. When you stay invested, even through those bad years, you usually get a really nice recovery when the markets turn around, and they usually happen right at the beginning, right when people are getting out and going to cash. So that's the importance of staying invested. And then the last one is there's many more good years than bad years. So it's really about just being patient, staying invested, and reaping those rewards of patience and discipline that a lot of people don't have. That's why you get better returns for being patient. All right, guys, thanks for watching. I hope this was helpful. Reach out to me if you have any comments or questions, and God bless.